Hello, everybody. I'm Matthew Dixon. I bring to you 40 years worth of trading experience. I've traded through the 1987 market crash, the dot-com boom and bust in around the year 2000, the world financial crash of 2008-9, when Bitcoin was born, of course, and I'm with you today. So today we're going to focus on three particular crypto assets that I think are of interest to people. They tell us a lot about what's going on in the market. And we're going to focus on also on the dollar index. I think it's well worth having a look at dollar index because that often actually leads the way with not only cryptocurrencies, but all risk assets, whether you're looking at the stock markets or crypto assets or many other risk assets. The strength of the dollar is very, very important to us because it's the world's reserve currency. So that's why we're going to take a closer look at that. We have already had CPI figures out of the US, and those figures actually came out much better than expected. There was big concern out there that we might have elevated inflation figures because of the tariffs that Trump has imposed around the world. Tariffs obviously raise prices, and you would expect that to filter through to inflation. Now, it's either that it's really not filtering through to inflation, or possibly that it's delayed. It's not going to happen just yet. It obviously takes time for prices to rise and to actually feed through to those CPI figures. And don't forget, CPI figures are backward looking. This is looking at May figures now. Now we're in June. So I would expect probably we will see these figures start to filter through, or inflation numbers start to filter through and be elevated from perhaps next month. So as I say, it's good for us to look at those inflation figures and how they affect the dollar. And the dollar is affected by the outlook for interest rates. Now, if you look at the FedWatch tool, for example, it tells you, it actually told you, it tells you right now that the chances of a rate cut at the next meeting, that's next Wednesday, the next Fed meeting, are just the chance of a cut is 0.1%. The chance of a hold, 99.9%. That tells you that rates are almost definitely going to stay on hold. Now, that is actually quite a good sign for the markets. If you're wondering about how this affects you and your portfolio, your cryptocurrencies, it's probably a good thing that we're not dropping rates. If they're dropping interest rates, it's actually basically in response to panic in the market. The growth is slowing substantially. They need to cut interest rates to try to stimulate the economy. So the point is, rates are staying on hold. The actual next meeting after that, coming at the end of July, July 30th, it's also highly likely that rates are going to stay on hold. The first possible cut, we're looking at possibly September. So this means that there's a great deal of stability baked into this market. That's good for risk assets. It tells you that the backdrop is potentially good and potentially constructive, that prices of assets might rise for the near, for the relatively foreseeable future. Sorry. So I'm going to focus now. I'm going to actually just share my screen so we can look at some of those assets and really see how they're faring at the moment. With dollar index, now we've had, as I say, that CPI news. The CPI came out relatively lower than expected, and that's what really matters. Expectations, and whether we miss or beat those expectations is all important. Now, as soon as that new CPI news came out, we saw the dollar falling rapidly, and we can see that with the red candlesticks there. Got three big red candlesticks in a row. They call them, I think, three red soldiers, I think is the name for those. But anyway, the outlook for the US dollar for the time being is negative. That's actually good for risk assets. It means that expectations are not that interest rates are going to rise. Remember, if interest rates rise, it's pulling money out of the economy. If interest rates remain as they are, then that's probably a good sign. And a lot of these policies that Trump are putting in place is actually potentially weakening the dollar. That's not a bad thing for risk assets. Remember, dollar is the world reserve currency. Everything is priced in dollars. If the dollar goes down in value, then those assets actually increase. The dollar value of those assets increases. So this is why it's very important. So as I say, I'm expecting just from this chart view, I'll just scroll out a little bit. I'll look at the daily chart and just show you where we're at very briefly. Basically, we had an ABC higher. In Elliott wave terms, that is a correction. That is against the trend. The trend is very clearly, as we can see, the trend is down, quite sharply down. We've had basically a wave one, down. I just scroll out a little bit more. Wave one down, wave two up to there, then a big wave three down, ABC wave four, pushing down in wave five. It should actually take us quite a bit lower. And my target is for the dollar index is 95. We're currently on 98. So I'm expecting lower dollar. Dollar is actually inversely correlated to Bitcoin and cryptocurrencies. So if the dollar is falling, that's actually a good sign. So we're likely to see advancing crypto prices. So let's just move over very quickly to Bitcoin, see where we're at. There is potential that we're near the top. It's possible that we're near a current top in the market anyway. Not to say that longer term we won't rise to new all-time highs for Bitcoin. I'm quite sure we will because it is an amazing asset. Only 21 million will ever be in existence, and there's massive demand. We actually see the demand from world governments, let alone institutions. Demand for Bitcoin is just rising constantly. So again, with Bitcoin, we had the previous all-time high labeled here as wave five. That was actually potentially a larger wave three. We've had an ABC correction down. Remember, ABC is actually against the trend. So we're actually now moving potentially impulsively higher. So we could push to new all-time highs in the near future, especially based off that CPI news that we've had. It could also be that we actually have the correction could be drawn out some more sideways before we push to new all-time highs. So I'm not telling you it's going straight to new all-time highs, but I'm just telling you the environment is really strong. It's really supportive. CPI news is supportive. The news out of America is actually supportive at the moment. So I would not dream of going short on this market at the moment, even though a correction could continue further to the side, possibly down a little bit. Medium term, I'm expecting new all-time highs, smash through the previous all-time high of 109, 110,000, wherever it was. I think it was actually 112,000 we touched, wasn't it? So we should smash through that and go well above there, possibly beyond 120. Long term, we really could have $1 million Bitcoin. Not saying we will. Obviously, we have to do our analysis and follow the price as it goes, but that's a possibility. So I just moved quickly over to Ethereum. Ethereum's had a really good day. We can see the move up there. I've actually been watching this consolidation here. So we had the Petra upgrade not long ago. That was early May. We had the Petra upgrade, which improved the metrics for Ethereum considerably, and we got basically a massive pump in price. We then had this sideways consolidation, this choppy movement. It's basically a consolidation. It's not with the trend. It was slightly against the trend, pulling price down a little bit here. But then after a consolidation, this is basically what's called a bull flag. We expect this to be a break higher. That's precisely what's happened, and we could continue higher still. This was actually resistance, this dotted line. It looks as though we're potentially breaking through resistance, which is another really positive sign for Ethereum. So I'm hopeful there. I just also want to touch on Solana. I think it's an amazing asset. Obviously, it's the chain of choice, certainly for meme coins. We've had, I think, a correction from the all-time high of $295. We've actually corrected down quite sharply, actually went down to around the $90 area. And from there, we've moved up. I've got it labeled at the moment as wave one because I think it's a 5-wave move higher. And we've been working on a correction to the downside. Now, it could be that there's more to go with this correction, or it could already be complete. It's actually not very easy to tell with corrections when it's complete. But a correction, remember, is against the trend. So any movement we're seeing is against the upward trend at the moment because we have 5 waves here. So even if we have further consolidation, I'm still reasonably confident we're going to see further highs above this local high here. So I'm actually quite positive. I think Solana is constructive. I did actually take profit myself today on Solana because I was expecting we might get some higher CPI news, which will be damaging. That didn't happen, but Solana hasn't really managed any particular breakout. In fact, none of the cryptos so far have managed to break out following that CPI news. And that's worth taking note of because from the top there, we have had 5 waves down on Solana. So this looks like a choppy kind of movement up, which I've got labeled as a wave down, a B wave up, and there's potential for a C wave down. After that, we should rise again really rapidly. But I still think there may be more yet to come. with this correction on Solana and on Bitcoin and on Ethereum. I think we're actually due a correction anytime soon. Again, you need to take your own decisions, and do your own analysis. But I think that that's sensible guidance that I'm giving you there to certainly take note of. Nobody knows the market for certain. Trading is not about predicting the future. It's about trading risk and reward. So for my first show with you today, I really hope that was helpful. I look forward to coming back. Please give feedback and ask me if there's any particular asset or any particular questions. As I say, I've been a trader for 40 years. I've got a master's in finance and investment. So I've got lots of information in this old head that hopefully I can pass on to you to help you with your trading. So thank you again for listening and look forward to catch up again soon.